A historic milestone. Bitcoin surpasses $100,000. Bitcoin has made history, reaching a level that was once thought to be unattainable. The world's leading cryptocurrency has shattered expectations, soaring past the significant $100,000 mark, a feat that has left many in awe. This achievement is a testament to Bitcoin's growing acceptance as a store of value and a viable investment asset, solidifying its place in the financial world. It signifies a seismic shift in the financial landscape, challenging traditional notions of currency and investment, and paving the way for a new era. This milestone is not merely a number. It is a symbol of the changing tides in the financial sector. It represents a paradigm shift in how we perceive money and finance, highlighting the growing influence of digital currencies. Bitcoin, once relegated to the fringes of the financial system, is now demanding recognition on the global stage, proving its critics wrong. Its rise is a testament to its underlying technology, its decentralized nature, and its potential to disrupt the established order, making it a force to be reckoned with. The journey to $100,000 has been marked by volatility and uncertainty, with many ups and downs along the way. Yet, through each boom and bust cycle, Bitcoin has emerged stronger, its network more resilient, and its community more dedicated. This latest surge is fueled by a confluence of factors, including political developments, regulatory shifts, and a growing wave of institutional adoption, all contributing to its rise. As we enter this new era for Bitcoin, it is crucial to understand the forces driving its ascent and what this means for the future of finance. What factors have propelled this digital asset to such unprecedented heights? The answers lie in a complex interplay of market dynamics and technological advancements. Let's delve into the political landscape, the regulatory environment, and the changing dynamics of the market to unravel the story behind Bitcoin's historic rally and what it means for the future. The 2024 U.S. presidential election sent shockwaves through the global financial system, creating ripples that were felt far and wide. Donald Trump's unexpected return to the White House, coupled with his vocal support for Bitcoin, injected a surge of optimism into the cryptocurrency market, which had been experiencing a period of uncertainty. Trump, who had previously referred to himself as the first Bitcoin president, reignited this sentiment, bolstering confidence among investors and enthusiasts alike. Trump's pro-business stance and his history of challenging traditional financial institutions resonated with many in the crypto community, who saw him as a potential ally. His election signaled a potential shift away from the perceived hostility of previous administrations towards digital currencies, which had often been seen as a threat to the established financial order. This perception of a more favorable regulatory environment under a Trump presidency played a significant role in fueling Bitcoin's upward trajectory, as investors anticipated fewer regulatory hurdles. Furthermore, Trump's appointment of Paul Atkins as the new chair of the Securities and Exchange Commission sent a clear message to the market, indicating a potential shift in regulatory approach. Atkins, a known advocate for deregulation and a proponent of blockchain technology, was seen as a welcome change from previous SEC leadership, which had been more cautious. His appointment fueled speculation of a more lenient approach towards cryptocurrencies, potentially paving the way for wider adoption and innovation in the sector. The combination of Trump's vocal support and Atkins' appointment created a perfect storm for Bitcoin, driving its value to new heights. This confluence of events signaled a potential turning point in the U.S. government's stance on cryptocurrencies, fostering a sense of optimism and driving significant investment into the market, which had been eagerly awaiting such a shift. Paul Atkins' appointment as SEC chair marked a pivotal moment for the cryptocurrency industry, bringing a wave of optimism and anticipation. Known for his deep understanding of financial markets and his belief in the transformative potential of blockchain technology, Atkins brought a fresh and innovative perspective to the regulatory landscape. His arrival signaled a departure from the cautious and often adversarial approach of previous administrations, setting a new tone for the SEC. Atkins' tenure was marked by a commitment to fostering innovation while ensuring investor protection, a delicate balance that required careful navigation. He recognized that overly burdensome regulations could stifle the growth of the burgeoning cryptocurrency market, potentially hindering technological advancements. Under his leadership, the SEC adopted a more nuanced approach, seeking to balance the need for oversight with the importance of allowing innovation to flourish and grow. One of Atkins' key initiatives was the establishment of a clear regulatory framework for digital assets, which was a significant step forward. This framework aimed to provide much-needed clarity for businesses operating in the crypto space, reducing uncertainty and fostering investment, thereby encouraging growth. The SEC, under Atkins' guidance, also took steps to address concerns related to market manipulation and fraud, working diligently to ensure the integrity of the cryptocurrency market. Atkins' leadership at the SEC marked a turning point in the relationship between the U.S. government and the cryptocurrency industry, fostering a new era of cooperation. His pragmatic approach focused on fostering innovation while safeguarding investors, created a more favorable regulatory environment, contributing significantly to the surge in Bitcoin's price and overall market confidence. The psychology of the market is a powerful force, especially in the volatile and unpredictable world of cryptocurrencies. Bitcoin's surge past $100,000 was not merely driven by fundamentals. It was also fueled by a wave of optimism, excitement, and perhaps even a touch of FOMO, or fear of missing out. The psychological impact of such a significant milestone cannot be overstated in any way. Breaking through the $100,000 barrier captured the imagination of investors and the general public alike. It generated headlines, sparked conversations, and fueled a sense that Bitcoin was unstoppable. This positive sentiment, in turn, attracted more investors, further driving up the price. As Bitcoin's value climbed, so too did the media attention, creating a self-reinforcing cycle of hype and investment. The fear of missing out on potentially life-changing returns drew in both seasoned investors and newcomers, further fueling the rally. However, the emotional roller coaster of a bull market can be treacherous and unpredictable. Greed and fear are constant companions, and the potential for rapid gains is often accompanied by the risk of equally swift losses. Understanding the psychological factors at play is crucial for navigating the volatility of the cryptocurrency market effectively. In August 2020, MicroStrategy, a publicly traded business intelligence company, made headlines by announcing a bold move. It had invested $250 million in Bitcoin. This marked one of the first major instances of a publicly traded company adopting Bitcoin as a primary treasury reserve asset. MicroStrategy's CEO, Michael Saylor, cited concerns over the devaluation of the US dollar and the long-term potential of Bitcoin as key reasons for this decision. This move not only boosted MicroStrategy's stock price, but also set a precedent for other companies to consider Bitcoin as a viable asset. The approval of Bitcoin ETFs, or exchange-traded funds, has been a significant milestone in the cryptocurrency world. These financial products allow investors to gain exposure to Bitcoin without having to directly purchase or store the digital asset. With the introduction of Bitcoin ETFs, institutional investors, including pension funds and hedge funds, have found it easier to invest in Bitcoin. This influx of institutional money has added a layer of legitimacy and stability to the market, potentially paving the way for further mainstream adoption. As more ETFs gain approval, the landscape of Bitcoin investment continues to evolve, attracting a broader range of investors. In recent years, countries like Bhutan and El Salvador have taken significant steps towards integrating Bitcoin into their economies. This move has sparked debates about the legitimacy and future of cryptocurrency. By adopting Bitcoin, these nations aim to attract foreign investment, boost economic growth, and provide financial services to the unbanked. It's a bold experiment, and the world is watching closely to see how it unfolds. As Bitcoin continues to evolve, investors are keen to understand its future trajectory. While some predict astronomical growth, others caution against potential bubbles. It's crucial to diversify one's portfolio and stay informed about market trends. Long-term strategies often emphasize holding on to Bitcoin, while short-term tactics might involve trading based on market fluctuations. Always remember, investing in cryptocurrency carries risks, and it's essential to make informed decisions. The idea of Bitcoin becoming a global reserve currency is both intriguing and contentious. Proponents argue that its decentralized nature and limited supply make it an ideal candidate. Critics, however, point out the volatility and regulatory challenges. If Bitcoin were to achieve this status, it could revolutionize the global financial system, reducing reliance on traditional fiat currencies. Only time will tell if Bitcoin can truly become the cornerstone of global finance. We've explored the multifaceted world of Bitcoin, from its origins and technological underpinnings to its potential future as a global reserve currency. The journey of Bitcoin is far from over, and its impact on the financial landscape is undeniable. As we move forward, staying informed and adaptable will be key. Thank you for joining us on this exploration of Bitcoin's market dynamics. Until next time, stay curious and stay informed.